What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Nick Collins. How you doing today, Nick?
I'm doing great, Dan. How are you?
I'm great because my very favorite audience member is joining us today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of stuff. And why would I interview them? Well, it turns out if you want access to private deals, which are also sometimes called 506B deals, you have to have documentation of your prior substantive relationship because the SEC needs to see that to make sure that you're actually finding out people's appetite for risk, core competencies, and all that kind of stuff. And that's what we're doing. And I'm making sure that you learn how to effectively communicate on the subject of commercial real estate. But before we get too excited about that stuff and all the things that Nick is doing in syndications, Nick, do you want to say a thing or two about yourself first?
Yeah, I got into real estate on the single family side, flipping some houses. Eventually found my way to becoming a realtor, and I really just wanted something where I can invest more passively without a whole lot of work, is the LP route,
Mhm.
and that's kind of what landed us here right now.
Exactly.
Although I'm finding LPs investing isn't necessarily passive; it's a lot of work.
Especially up front, yeah, vetting your sponsors and all that kind of stuff. And that's one of the reasons why I go through the five distinct motivations. But before I do that, I have to say, but wait, check your eight. Nick, I don't know if you can do this, but can you see through your camera and into the user's devices down at the like 7, 8 o'clock ish? You might see this hideous red subscribe button in the audience's screen, and they really should do so. No, okay, it's just this
I
stupid.
think, I think they should subscribe.
Yeah. It's a good plan as far as I'm concerned. But the five distinct motivations. I've talked to all sorts of commercial real estate syndicators, investors, people who are involved in this space, and everybody has their own unique why. But at the same time, I found when you get down to brass tacks, I could categorize them into these five different motivations. And it's really important to know the motivation of an investor or syndicator because these deals take months. It's a lot of work. There are risks involved. And so you need to know that they're going to follow through with it. And so this is how I find out. So the first motivation why some people make their next acquisition is because they're preserving their purchasing power. What's that all about? Well, some people, they already have a portfolio of assets, and the way that they make their ends meet is by the proceeds or profits of ownership. And so the only reason that type of person is going to make their next acquisition is either if inflation is eating away at their purchasing power of the cash flow, or if they can buy at a steep discount, like when there's an asset crash or other sorts of distress. That is not my big reason for being involved in this. My big one is trading time directly for wealth. Now, I've got a background in technology, specifically it's the CRM industry. I have my own agency. I've had an agency in CRMs since 2011. And so I was helping people make all these millions of dollars in sales online and emailing 5 million emails a month, literally for years and years and years. But my old boss was flipping 10 houses a month. I was looking at all the money he was making doing that so he could actually pay me. And I was going like, well, wait a second, I'm paying more in tax than anybody. So how do I pivot and use my skills so that I'm getting reward in the form of deployed capital, aka equity, instead of paying most of it off to tax? So that's what I'm up to. But many people, they're attracted to commercial real estate because they see these big numbers floating around and they want to fast track their retirement. But more specifically, the people who choose this one, what it really means is that they want to own their schedule a little bit more. And maybe that means actual fast tracking retirement, but maybe it means they want to get to the point where they can work fewer months per year or fewer weeks per month or something like that. And that's why they're doing it. They're looking to scale back a little bit. That's in stark contrast to this next group. These guys, they're super duper ambitious. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're making these acquisitions. They're great people to have on your team because they're going to be hustling into their 90s. But that is also not really my motivation. The last group, though, they have something in common with these ambitious ones, which is they're not going to stop hustling until they're in their 90s. But really, their motivation, it has one key difference, which is they've found a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they figured out that you need a substantial financial backing if you're really going to make those bigger, more ambitious goals happen. And that's why they're making these acquisitions. So Nick, as far as you're concerned, I know that you're doing these passive investments these days. But I don't want to put words in your mouth. What combination of those would you say describes you best?
Yeah, I would go with the fast track of retirement. I think that I think it can happen in the stock market, but today I think you also need diversification, and there's a lot of money out there. And with a little due diligence and understanding and networking, I think this is a great avenue.
I love it. I love it. But of course, there's risks involved. And this question here, it comes from when you do these 506B deals, the securities attorneys always insist that you do these big, really invasive questionnaires about your finances. You have to tell them all sorts of things so you know more about their financial situation than you do about your own parents in all likelihood. But the problem was I saw this one question on risk, and I'm like, yeah, that I don't really think that self-assessment will really work for that sort of thing. So I need to make sure that my guest actually understands the risks involved. And I use a fill in the blanks question for that. So Nick, there are many popular investment asset classes, but I think blank is too risky. What's too risky for you? It can be inside real estate, outside real estate. What's too risky?
Yeah, I personally just think you have to do your own due diligence, and the biggest risk is not doing anything.
Mm-hmm.
Now you just need swings at the bat, and anything you could lose money in anything. Just look at most people's stocks portfolios, but you just got to take swings at the bat, and at the end of the day, keep swinging, and you'll hit it.
Right, right, and the definition of inflation means that you absolutely 100% do lose when you're not investing. You know, like it's guaranteed that you're going to lose, 3%, something like that. And if you're putting money in a bank earning, like 2%, something like that, it's like, okay, well, that isn't even staving off your losses. So I definitely agree. But this is where I do the segue of reminding people once again, man, this thing is just so off the hinges. But yeah, reminding people to sub. But that's the segue to go into this segment with the core competency cube. You can get your own copy of this. It has the 6 different roles in a commercial deal, and I go through all 6 sides. It takes about 2 minutes, and this is in every single episode of Chance Encounters. And the key idea, there are a couple of them. One is I want to make sure that you, regardless of your level of sophistication, you understand what a team looks like in a commercial deal, and you know how my guest fits into those. If you want your own copy, you just go to dandoesdeals.com. It's totally free, and like a complete dummy, I don't even ask for your email address. That's the worst thing you can possibly do from a marketing perspective, give away your freebie and not ask for contact information. But I do it because I want to make sure that you print this out and you practice describing these different sides, so that, because I really think that the biggest barrier to most people's commercial real estate careers is being able to explain it well. So we're going to go through all these 6 different sides. You can print it out, practice on your friends and family and all that kind of stuff. But the first side I need to talk about is repositioners. They look at a bunch of different properties because they're acquisitions people. They do a bunch of paperwork. What's this paperwork all about? Well, there's a fancy word for it. It's called underwriting. That means they're doing the math. They're figuring out, first of all, is this property even making the amount of money that the sellers or the brokers are saying it is? Because there's all sorts of fun and games they can play with that. And you need to do that deep dive. But Many people just call these the people investors. They call the financiers investors. They call the KPs investors. But I call them repositioners because they are responsible for figuring out how are they going to change the property and find more upside. And another part that's key to any repositioner's job is having financier relations, investor relations, talking to the banks and lenders and finding more advantageous loans, because that goes straight to the bottom line of the deal. If you get a cheaper loan, then you're making more money. So they have a lot of financier relationships, but financiers are people who only deal with paper and money. They are not part of the GP team. They're not involved as a general partner. But chances are that's not going to be enough. The next place the repositioner is going to look to make those changes is they're going to figure out how can we stop those Benjamins from going down the toilet in the operations. But there's more to operations than just unclogging toilets and collecting rent and mowing lawns. One of the things that I bring to the table on my GP team is I've got my marketing chops for online. And even if you are going after the bigger deals, you know, me personally, I prefer deals where it's more than 100 units. And the reason for that is because you can outsource your operations. But if you find that they can't fill the units, that's probably a marketing part. On top of that, I also contribute the automations piece because of my CRM experience, but and also web assets. But operations frequently isn't enough upside for the repositioner, and so they'll get a contractor team involved to do a value add. In other words, they'll renovate the units so that they're nicer. The idea being that the next resident will be happy to pay more in rent than the previous one because it's a nicer place. But you can definitely go broke making too many improvements and spending too much on contractors. And one of the key pieces of the puzzle that you're going to need to have, and I especially need this because, well, I don't know if you know this about me or not, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that will not be me. I would still be at an airport in an hour or two. So I need to depend on people who live nearby, who can be there in short order and make sure that the contractors aren't cutting corners. And then the photos that the remote based team is getting, they're not like doctored or cherry picking, and same with the operations piece. But when the repositioner has decided on a property, let's say it's 350 units and we're tens of millions of dollars, they turn around to the financiers, the lenders, and say, hey, you don't happen to have, I don't know, tens of millions of dollars you want to lend us for this, do you? And the question that the financier needs answered before they're going to say yes, and I haven't mentioned it yet, is who is the sponsor? Who's the KP? And what's that all about? Let's say, hypothetically, let's say you're a physician or an attorney or engineer, something like that, and you decide that you and your friends should pool resources and take over a commercial property. The snag in your plan is that you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. So if you're trying to take over this 350 unit apartment complex, you need somebody who already owns a 350 unit apartment complex. On top of that, you need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Nick, you are involved passively as a financier, and it sounds like that's a lot of where you want to aim, and you have your career to keep on making more investments. But I don't want to put words in your mouth. How do you see yourself fitting in on the die if I'm off the mark?
Yeah, definitely growing my LP position through a few different operators, albeit storage, multifamily. I know there's a lot of people kind of frowning on multifamily lately, but RV parks, whatever it may be, mobile homes, and just really the most important thing to me is a great communicator, good operations, and really, I would take mediocre returns from a great communicator than phenomenal returns from a bad communicator, because that tells me how are you operating my money and other people's money, and how likely is it that you're going to potentially lose our money versus not.
Yep, that's a great way to put it. And so that brings us to the next part, which is about the buy box or the ideal property. And when investors or syndicators are saying, hey, what you're looking for, what's your buy box, what's your ideal property, we're asking about three main things. First one's geography. Where is it? which states, which counties, possibly even which neighborhood. That's absolutely going to matter. The second one is going to be size. We mostly talk to multifamily investors and syndicators on this show, so frequently people will use unit count to describe the size, because you're going to have a completely different type of group taking over 15 unit apartment complexes compared to 150 unit apartment complexes. So that size is going to matter. And in some other types of commercial real estate, like warehousing and industrial, you use square footage, but that size is going to be a key part in the buy box. But the third one is called class. And one thing I don't like is when people use the same word for more than one completely separate thing. So I separate class into two different terms. The first one is condition. So when it comes to condition, it has to do with how old is the property? How beat up is the property? Is it more or less up to date? And what about amenities and luxuries? So like, is it full of, like gyms and things like that where residents are able to make use of them? Or is it really, really no frills, bare bones, that sort of thing? That's condition. Now, the second meaning of class, it actually means area. And when you're talking about area, you're talking about what's the crime rate like where this property is located? What are the school districts like where the property is located? And then, of course, how popular is it, which is how many cars, how much foot traffic goes by the property in any given day. But both of those two meanings of class are rated with the same system as in grade school, where you got A plus at the top, and then A, and then A minus, and B plus, and so on. So Nick, you mentioned that you diversify among several different types of commercial real estate, like RV parks and self-storage. I love self-storage because you don't have to evict anybody. But as far as ideal property, like, I know it's a little bit like you're fairly agnostic about it, and the returns will dictate it more than anything else. But what's your take as far as ideal?
It's really, I prefer the red states more than blue, but I mean, it's not that I would turn that down. Ideal, again, to me, it's more about the operator than the property. I mean, that's first, and then the property would come second. And then I would just look at crime rate. I would verify some job numbers, rent numbers, and I kind of make my decision that way.
All right, beautiful. And then,
The business.
yeah, go ahead.
I was going to say, and the business plan. I mean, obviously they have to execute the business plan, so I'm not really going to be too keen on like small, but million plus at least, and whether that's 20 units, 15, whatever it may be. Really, what's the business plan, and what are the returns,
Mm-hmm.
and the experience level of the GPs.
Excellent, excellent. So then my next question has to do with people, and everybody, like, is so eager in commercial real estate to help build new teams. And I think it's because it's so multifaceted, and nobody is all six sides of the die for any meaningful amount of time. But even though we're eager to help each other out, our own unique skill sets mean that we're better suited to help some people more than others. It sounds like, Nick, you're similar to me, where the sponsors and KPs are going to be the people who you really want to reach out to, because they're the ones who are actually behind the deals. So I'm always eager to meet them, because they actually have the foundation where a guy like me with my marketing and digital skills will be useful. But the other thing is, because I'm from the internet, the locals are also people who I'm eager to meet up to, which, a lot of repositioners are also locals. But Nick, as far as you're concerned, who are you really looking to talk to more than anybody else?
The sponsor team more
Mhm.
than anything.
Right, exactly. And just and with you, I can give a little bit more background than I can usually, which is that if you are a limited partner, then you're going to want to know the sponsor team, just because you'll frequently be approached by people who are just trying to raise capital, or, basically they're not really signing on the loan, and they're involved in a more limited capacity. But it looked like you had more to say there, Nick. What is it?
I'll just the sponsor team. I mean, they'll let you know who's local, what that experience level is local, and some of them are actually building out their own local teams. So that's always, I think the ones that are doing that are going to be in a great position 5 years from now versus some of the ones that maybe aren't, because it can maintain more control. I've been
Absolutely.
wrong before, so we'll see.
Awesome, awesome. And so the next thing is about how to reach out. I got this distinct last name, so I'm super duper easy to find. LinkedIn is the social media platform that I'm on most often, so that's the best place to connect with me. But if you scan this QR code right here, then that brings you to the FAQs page of 506 BME, which is the platform I offer the service. It's similar to CRMs, where I can document your substantive relationships. I actually even have it verified by a third party and have a few proprietary measures to make sure that you actually have documented proof that you knew somebody's level of sophistication, appetite for risk, and that you're being really upfront about what you're going to be doing in these deals. So you can reach out for that. But Nick, as far as you go, is there a social media platform that people should use, or a website, or what's the best way for people to reach out?
Yeah, I mean, I'm on LinkedIn, Nick Collins. I'm on Facebook, Twitter, Instagram. I guess you can go to my website at nickcollinsrealtor.com, but I don't see many people want to reach out to me there.
Right, right, right. Yeah, that's pretty normal. The only time you get a ton of traffic online is if you pay for it through ads and whatever. But
Right.
I have one other thing to mention. It's actually not for you, Nick. It's for you in the audience, which is my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's because of the hideous subscribe button that's just down there, and you can click it and it doesn't cost you anything, which is really, really cool. And I'm biased. I want people to hit it so that YouTube starts paying for these videos instead of me, and because I think that would be amazing. As far as you're concerned, though, the only effect of hitting the button is that you might see my videos on your list of suggestions on YouTube, but you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Nick, I appreciate you joining me today. This has been great getting to know you a bit better.
Thank you, Dan.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 BME or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.